Last week, we saw the S&P starting to form a consolidation. And as we look at NVIDIA, is it on the verge of a breakdown, which could send stocks substantially lower? And we're going to take a look at the breadth and find out, is it giving us a major stock market warning? We look at the fear and greed index. We are dead smack in the middle of fear and greed. So the bulls and the bears are kind of neutralized at this moment. We look at the most recent investor sentiment survey, which came out on the 11th, and we can see the bulls have dropped down to only being 43.3% bullish. We see most of the bulls that jump shift basically went to neutral. We see that the bearish bets only raised slightly to 31.7 from 30.7. Now we come over and look at how the stocks performed out here last week. Let's take a look at one of the big losers out there was NVIDIA. And that was a chart I shared with you guys earlier where it looks like NVIDIA could be about to break down. However, when we look at the big gainer out there, not only was Tesla up 15% for the week, take a look at AVGO up 32%. Now, our number one stock picker out there, Miss Nancy Pelosi, called it well in advance. She made $1.8 million on AVGO, which was Broadcom. How did she know Broadcom was going to go up as much as it did? I got to be honest with you. She needs to go ahead and take Kramer's spot. She needs to go ahead and get her own CNBC show. I keep trying to reach out, see if she wants to go ahead and collaborate. We can call it Pelosi Picks because her and her husband are undefeated. Now, over the past few weeks, I've been sharing with you guys this stat, and it's basically boding very well for the S&P. When the S&P trailing was up 10% or more, then we can see that we have a very bullish stat going all the way into the end of the year. Now we can visualize this even more so with this graph right here. Visualize it, just look at the line graph. And what it basically goes on to say is Santa comes later in December. Notice after the 15th by the bottom graph, what do we see? We see the S&P having a nice rise on the way up. However, there are major warning signs that we still need to pay very close attention to. Now, we look at this article right here. We can see Peter Schiff says the economy is on borrowed time, and we keep hearing that time and time again. He also wants to go ahead and say, buy more gold. However, the person that I'd be a little bit more concerned with is going to be Mr. Tom Lee. We know he is ultra bullish 100% of the time. However, he is now signaling we need to be very cautious. And if we scroll this article down here just a bit, notice right here, 2025 year ahead, better first half, worse second half. And he's still projecting the S&P 500 to hit 7,000 by mid 2025. Then look at the massive correction we get and then closing out the year somewhere around 6,600. Now, 6,600 is still substantially higher than where the S&P right now is currently trading. Now, I know what you're saying, Mike, the market will never go down. I got some charts I want to share with you guys here in a few moments. But again, let's go back and circle back real quick and take a look at NVIDIA. If NVIDIA breaks through this support level, being that NVIDIA is such a high weighting in the S&P 500 and the Nasdaq, that is going to put pressure on both of these indices. However, if NVIDIA can firm up down here at this lower support, maybe even overthrow it a little bit and then come back up, that would actually be bullish and have Santa Claus rally the market towards the end of the year. Now, I still would not even be upset if NVIDIA made it all the way down to the ABC projection down here about 125. Now, when we look at some of these charts real quick, let's take a look at the SPY versus HYG. And notice as the SPY has been consolidating up here near all-time highs, what is HYG doing? The high yield bonds, we can see it's starting to break back down. It's starting to break below some of its swing points, and that is a warning sign out here for us as well. On the top, we have the Dow Jones. On the bottom, we have the transportation index, and we can see as the Dow Jones was up here at all-time highs, notice the transportation index already started to roll over. That is a problem all in itself. Now, with a little bit of good news out there, we can see Friday, we actually had a red candle. And as we look at the footprint charts, notice the delta was positive 162,000. That is a bright spot out there. However, is that going to be enough? Because as we look at the SPY, yes, we have upper level consolidation. Yes, we have this ABC target up here at 616. However, if we come over and look at the equal weight S&P 500, RSP, look how drastically this looks. Now the S&P 500 is a weighted index. And if we actually look at the stocks that make up a majority of the weighting for the S&P 500, Apple is number one with a weighting of 7.34%, followed by Nvidia at 6.58. That's why it's important. If Nvidia starts to sink the ship, then it's going to put a lot of pressure out here on the indices. We also have Microsoft, Amazon, Meta, Tesla, Alphabet, and Broadcom coming in at number 9. Let's not forget, on Friday, Broadcom had a massive rally. Broadcom was up over 24% in one single trading session. And if we actually go on to look, Google has also been doing very, very well. However, this is only a select few of names, and we know that by just simply looking at the equal weight S&P. Notice each one of these red candles may not be a down day, but each one of these candles, we ended up closing lower than where we opened for the day. The MACD indicator at the equal weight S&P is also extremely weak here at these levels. Now I want to make everybody aware, Apex having a massive 80% sale off all their evaluation accounts, passing as little as 1 day, $125 activation fee across all account sizes. If you'd like to take advantage of this offer, use the link in the description box down below, use promo code Mike. And if you'd like to see the other 2 prop firms I'm currently trading with, also look at the link in the description box down below. Then we come over and we take a look at the QQQs. What did we see on Friday? Making another new all-time high, smashing the ABC targets to the upside. However, we closed out with a doji candle, meaning a candle of indecision. Now, if we compare that chart, if we compare the Q chart right over here to the equal weight Nasdaq, we can see the Nasdaq is actually holding up a lot better for the equal weight than what we saw with the S&P 500. So there is still hope. Maybe that bullish stat is actually going to hold true all the way to the end of the year and into 2025, which would also align with what Tom Lee was warning us about, being the first half of the year could be bullish, but then we start to suffer a nasty pullback going into the middle of the year. Now, before we jump into the charts, if we take a look at the economic calendar for next week, it is going to be action-packed. Coming on Monday, what do we have coming in? Monday, 8:30, we have the Empire State Manufacturing Index. 9:45, we have Flash Manufacturing PMI, Flash Services PMI. Then on Tuesday, 8:30 a.m., we have core retail sales coming in. However, Wednesday is going to be the big dog of them all. 8:30 a.m., we have the building permits. Then you know who's going to take the podium at 2 o'clock. We have Mr. J Powell with the FOMC statement coming out. Then we get to listen to his press conference. We will be streaming that. If you guys don't want to miss the next time I go live, make sure you're subscribed and you have the bell notifications turned on for all. Then we come over and we look at Thursday. Thursday, we have more news. We have final GDP numbers coming in at 8:30. We have the weekly unemployment claims. We have the Philly Fed Manufacturing Index. 10 a.m., we have existing home sales. Then coming in on Friday, we have the core PCE price index, the Fed's preferred measure of inflation. Then at 10 a.m., we have revised consumer sentiment, followed by revised inflation expectations. Now, as we come over and look at the volatility index, the VIX, what do we see? We're at very, very depressed levels. Right now, we're trading at 13.8. We have been slightly lower, but notice the MACD indicator is starting to cross up. So are we about to get a volatility spike out here in the market? Because if we come over and look at the dollar index, we see the dollar index has been on a tear on the way up, just a rocket ship on the way up. We look at the 10-year yield rocketing up once again. Now, as the yields go higher, think about this. This is going to make it harder and harder to borrow money. This could be a factor that slows down the overall economy. Then if we come over and look at the yield curve, the 10-year versus the 2-year, what do we see? We basically almost reinverted once again. However, we simply bounced off that area and rocketed back up. However, another chart I want you guys to pay very close attention to, this is going to be the 10-year versus the 3-month. Just a moment ago, I showed you the 10 versus the 2. Now, look how steep that yield curve is starting to get. Look how it is uninverted. That is going to be a problem for the market as well. That is signaling we are about to have a recession in the very near future. Now, when we come over and look at gold, we've been waiting forever for gold to break above one of these swing points, either break above the swing point over here or start to break down below this lower swing point. Now, we have violated this upper swing point here, so we do have a validated A to B equals C to D pattern, which does complete near all-time highs at about 2,789. However, we've now pulled back towards this high volume note on the composite profile. So if you're a gold bull out there, this is what you want to see. You want to see gold start to firm back up at these levels, because if we start breaking down below these swing points, then this could be nothing more than a fake out, aka a trap, and then we're about to go substantially lower. Now on Friday, we saw gold was down another 33 points. Now as we come back over and we look at the SPY real quick, notice as we look at the candle structure, where do we close? We close roughly in the lower third of the range. However, we did not close below the low of the prior candle, so it's still slightly neutral, but it's looking more and more like we're about to get that pullback underway. As we come over, look at the daily chart, we see this consolidation that we've had in play. And one of the areas I'm watching is going to be this high volume node at about 598.26. Now we can also grab our Fibonacci retracement tool and measure from this swing low. I'm going to simply click the mouse right there, pull it right up to this upper swing point, and notice where the 50% level comes in, just below this high volume node. Now, if things do start to get ugly this week, we can see the market dropping down towards the 61.8, or actually right into this minus development area at about 592.49. As we look at the 4-hour chart, we see the MACD indicator is clearly making a beeline towards the zero line. Then on the 30-minute chart, this could be very interesting. If we start to see a little bit of weakness early on in the week, could we basically come down, maybe overthrow the low or have an equal low and set up some type of MACD divergence, which could lead us higher going into the end of the year? Now, when we come over and we look at the futures markets real quick, notice we closed slightly below value area low. And I want you guys to pay very close attention. The range last week was very contracted. We only had a 66-point range from the low all the way up here to the high. Now, if we look at the volume profile levels real quick, we have value area low coming at 6,125.5. We have the point of control coming in at 6129.50, with value area high being up here at 6154.50. Now, one thing to note, we do have an untested point of control down here below us at 6,082.5. However, we are going to be in a little bit of a conundrum because we have lower price targets below us. The fact that we closed below value area low on Friday gives us a heads up that this week or the next week, highly probable we're going to come back and test that level being value area low. Now, as I look at this chart, we also have a validated A to B equals C to D pattern, which will actually complete down here about 61.05. So do we see the market basically overshoot the lows from last week? Then we start to firm up a bit, maybe coming back, testing these volume profile levels. Now, one thing I do want to make you guys well aware of, last week's volume profile shape was a D as in dog. That usually signifies a breakout, or AKA a range expansion. However, the way we first break quite often ends up being a false break. So if we see the market open up weaker next week, maybe we see a little bit of a drift lower, and then the market ends up rallying back up. As we come over and we start looking at the daily profiles, we have a couple very interesting areas that we'll be talking about on the live stream, but this minus development area right up in here most certainly has my attention. We've already came into it once, twice, three times. If we come into it a fourth time, we are likely going to break up and out. And if this higher low holds from Friday afternoon, that could set up a larger A to B equals C to D pattern. And that would take the S&P up here to about 6136. However, could we basically undo all of that move? When we look at the volume profile levels, we have value area low coming in at 6111. We have the point of control coming in at 6126.00, with value area high being right up here at 6131.50. If we can break above value area high and we stay above it, I do want to look for some higher tests. I want to look and see, can the market potentially make another run towards all-time highs, or at minimum test this untested point of control up here at 6164.25. Now, as we come over and look at the QQQs real quick, notice we closed in the upper third of the range on the weekly chart. However, we do have a slight wick on the top. We have a much larger wick on the bottom. We have crushed the ABC targets to the upside. Then as we come over and we start looking at the daily chart, we basically have that candle of indecision. We have a wick on the top, we have a wick on the bottom, and we're going to see, can price continue to push on up higher? Keep in mind, we do have a gap a little bit lower down here at about 520.69, then another gap even lower than that at about 516.94. Once this pullback gets underway, then we'll see the Nasdaq coming down, filling those gaps. But if we look at the MACD indicator right now on the daily chart, showing no signs of letting up at this moment. We come over here, we look at the 4-hour chart, and we see the MACD indicator is kind of flatlined out here. Then as we look at the 30-minute chart, notice on Friday, we pushed to a new all-time high. We basically closed right near the point of control. Now on Friday, we did gap up higher. We did not come all the way down, filling the gap. And then we can see that other gap substantially lower right down here from a few days back. Now, when we come over and we start looking at the futures markets real quick, what do we see? Well, there's a couple minus development areas that have my attention. we have this large minus development area, which is an area we mapped out last week. We came into it, boom, rocket ship on the way up. However, there is another price target that we have. We have this A to B equals C to D pattern, and that pattern for the Nasdaq would complete at about 22,327. Now, as we look at the weekly profiles as well, though, we do have some minus development areas to contend with. You can see that we're just closing slightly above value area high, which really comes in at about 22,011.00. The point of control will be 21,943.50, with value area low being down here at 21,740.50. Now, one thing to note, this is going to be 2 consecutive untested point of controls. We have one from the prior week at 21,488. So it's going to be highly probable that this week, at minimum, we have a pullback sometime through the week, regardless if it's in the beginning or induced by Jay Powell, that brings the market down here to about 21,943 or potentially lower. As we dive down, we start looking at the daily charts real quick. Notice value area high is going to come in at 22,116.50. The point of control will come in at 22,083.00, with value area low being down here at 21,995.50. Keep in mind, I will be trading the March 2025 contract come Sunday night. Keep in mind, it is contract rollover, so that's something we want to pay very close attention to. Now, the profile kind of looks erratic because there was some contract rollover taking place on Friday. However, we still have this little bit of a minus development area below us, and we also got to be mindful of, we had a Diaz and dog shape profile. Was this nothing more than a false breakout, and then we're about to come lower? As we look out here on the 30-minute chart, we also have the potential for this A to B equals C to D pattern, which would complete down here about 21,866. In order for this pattern to be validated, however, we must break below the swing point at about 21,942. Now, if you guys like to learn about the pros and cons of take profit trader, make sure to watch this video right here.